Hey everybody, how is it going? Welcome back to my channel. This is the first video I have done in well over a week. I got the Omicron or the Omicron or whatever the hell you call it. Whatever it was, it kicked my butt. It's the sickest I've been in, I don't know, maybe forever. But I got my voice back, so I'm going to try to do another video. I still have some fluid in my lung, it sounds like, and I probably end up coughing a few times, so I apologize in advance for that. But I'm kind of dying to get back into the market. I did a little bit of trading since I was sick, but not much at all, and it seems like I have missed a lot. The market is rolling over today. I do have a hedge on in the SQQQ, but from what I am losing on some of my core positions, that is a very small supplement to make up for that. But anyway, we can see the QQQ is actually breaking through this support area today, so this is a very significant technical day for the NASDAQ. But, if we zoom out back a little bit here, we can see that the stochastics is in the deep oversold range right now, so that is a pretty good sign for a bounce coming soon. You can see every time it gets down into this area, we end up getting a pretty decent bounce. I don't think we're going to get one right away. Now that the market is breaking down like this, I think they're going to start coming after some of the bigger tech names that have kind of held up pretty well, like Apple and Microsoft. I know they've been hit a little bit lately, but if they really come after some of those names, you're really going to see the market start to accelerate to the downside. And I wouldn't be a bit surprised if that's what we see over the next week or two. And that's one of the main reasons I'm still holding my hedges in the SQQQ. Those things are really hard to try to call because when the market is rolling over and, trying to bottom, it moves so fast. So it's, putting a hedge on is one thing. Executing it perfectly is a completely different thing. And it always seems like I never, I never execute them as well as I should. But looking at the QQQ, let's actually go over to the weekly chart. Let me get these things out of here before I jump over to the weekly chart. If we jump over to the weekly chart, we can see we are deep oversold in the stochastic range. And the last time we were this oversold, you actually have to go back to the end of 2018. And that's actually the kind of bottoming process that I think we're probably going to ultimately end up having. And that's just, a guess. Who knows what is going to happen, how bad things get. I don't think we're going to go into a recession. If we go into a recession, I would expect a very deep bear market. But some of the economic indicators that I look at, I just don't think that that's going to happen. It still could, but that's my call as of right now. But let's actually go back to the end of 2018, because I think that's the type of market we're going to end up going into. And actually, let me go back to the daily chart so we can see that just a little bit better. Go past 2019, and then let's go to the end of 2018. I almost think it kind of feels like we're in this part of the market downturn right now. I think it's going to accelerate, and we're going to have one of these V type of bottoms. Now, that's just my opinion. We'll have to wait and see what happens, but that's what I was kind of thinking as the market was starting to move sideways, that we're just going to get one of these very last flushes. It's going to bring in some, bargain shoppers, and we're probably going to end up getting a little bit of a V bottom. And I don't think that the Fed is going to raise rates as much as the market is thinking. And I know Kathy Wood has been wrong on a lot of stuff lately, and there's no shortage of people dancing on her grave because her funds are down so much. But I do think that she is probably going to be right with the inflation picture. I expect inflation to start dropping off. And if you look at how the market has performed when inflation's been around 3% or lower, usually the S&P has a multiple of around 20 on it, and I think it's slightly below that right now, so it's slightly undervalued if you look at it that way. But either way, I think the market is going to probably go into a little bit of an acceleration phase to the downside. Let's jump over to the SPY. We can see the SPY is also breaking this support level that I had on the chart that I thought was very important. We're breaking through that today. We're also seeing that we are deep oversold on the stochastic on the daily on the SPY as well. And if you jump over to the diamonds, the Dow Jones Industrial Average, it's actually looking like it's rolling over even worse. So the Dow Jones actually is looking like it's getting a little bit weaker. Then, of course, my favorite is the IWM, and this one has been breaking down out of this wedge that I drew, last week. And usually when you get a formation like this, you end up getting a breakdown to the downside. So it's just pretty ugly charts on the indices as of right now. All right, well, this graphic I have up right here, I got off of the Compound, and if you haven't subscribed to that channel or checked out any of their episodes, definitely check it out. They are always showing really interesting graphics and charts, and they almost never disappoint. They do such a great job on it. But they had this slide up, and it was called "By the Invasion," and it goes all the way back to the Gulf of Tonkin incident in Vietnam, and some other wars that have happened over the last 30, 40 years or so, and how the stock market has performed. And invariably, every time the invasion happened, it ended up being a buying opportunity. Even if you look at the Afghanistan war here in 2001, definitely got a nice reactionary bounce once the invasion happened, even though in 2001 and 02 we had that deep bear market, because of the tech wreck, and there was some other things going on there, of course, not just this war, but every single time it ended up being a buying opportunity. So you have that dynamic where everybody's kind of on edge, they're not sure what's going to happen, but then once the invasion actually happens, you kind of get that downdraft in the market, and it ends up being short-lived and a pretty decent buying opportunity. And I'm almost thinking that's kind of what we're seeing play out in the market right now. So that's kind of what I'm expecting. And if we get, where Russia actually invades and it sends everything down super quick, I'm actually going to probably be buying quite heavily. But I just wanted to show you guys this graphic right here. I thought it was pretty interesting, but let's get into the trades that I made. All right, well, actually, before I jump into my trading activity, I actually want to go over the coal sector. I thought the coal sector was looking pretty interesting right now. Right here is the IX 1050, and that is the coal sector on my TC2000 trading software. And as you can see, it is very strong. It's breaking through this resistance level off to new highs over the last couple of weeks, and it looks like it is consolidating. We got some topping tails going on right here, so that's a little bit concerning, but overall, it's a very bullish pattern. And there isn't a whole heck of a lot of bullish patterns out there in the market. Of course, energy is doing well and coal is in there. But some of these coal stocks are starting to look really good, and they're actually pulling back. They're not all breaking out to new highs. There's a lot of them that look like they are on the potential for a nice swing trading opportunity. The first one I want to go over is HNRG. HNRG had a sharp move up. It is now pulling back towards that 8-period exponential moving average. So HNRG making a very nice rounded bottom formation. So if this one can find some support at that moving average, I think there's a pretty good possibility that there's going to be another leg up. This is that big first thrust up, and you get a little bit of a pullback, and then hopefully you can get that J-hook pattern where you could start, making that next leg up and challenging that previous high that we had back there in October. But HNRG is looking really good. Another one I like is SXC. We can see SXC has been in a long basing formation. Now it is pushing against the highs, and it is holding tight right there. If we can get a break above $8 a share, I think this is going to be a pretty decent tradable opportunity. Now, I know swing trades are not working that well in this market, but I mean, stuff that is setting up and looking good is actually few and far between, but the energy sectors are looking pretty good. But SXC, I think, is setting up very nicely. Another one is ARLP. ARLP has been pulling back, but you can see that it's making a nice little trend line right here. It's let me see if I can get another one going here. But if we can get a break above this trend line right here, I think that could be the next leg up in ARLP. So a very nice looking bullish flag formation, bullish pennant formation, whatever you want to call it, in ARLP. Another one is METC. Basically the same thing, sharp move up. Now we're making a nice bullish flag formation. So break above this trend line, I think, is a very tradable, a very nice trade to make, as far as risk and reward. Breaks above of that trend line, you want to stay with it. And of course, if it breaks above and then rolls over, you're not risking a whole heck of a lot to try to catch this next leg up in METC. Next one is Peabody Energy. This one actually was on my list yesterday, and it actually exploded through that formation today. So this is kind of like what I am looking for. A little late on BTU. I was actually wanted to make this video about coal yesterday, but I was not feeling so good yesterday, so I just scrapped that video till today. But BTU is already broken out, but this is kind of like what I'm hoping for in those other chart patterns. And the last one is CEIX. CEIX also making the same type of formation. Big thrust up. Now it's making a little bit of a pullback. So what you want to do is just kind of wait for it to break above that trend line, and hopefully we'll catch a little bit of a J-hook type formation where it starts that next leg up and then challenges the old highs that it made back in October. And well, I guess that was in October, but just want to show you guys those coal stocks. I think they are setting up for some very nice trades. Now, who knows if the market is going to be accommodating, but we'll have to wait and see for that. All right, so let's get into my trading activity for the day. I only made one trade today, and it was a day trade in Revelation Biosciences, ticker symbol REVB. This is part of my gap and go strategy. It doesn't look like there was a whole heck of a lot of movement right down here, but it was actually a 30% move in the stock, and I ended up collecting about 4.5% or so. But let's go to the minute chart and I'll show you how this trade played out. If you're not familiar with my channel, I like to do these gap and go strategies, and in fact in this type of market it has been very hard to play anything except a day trade. So I guess on the bright side, I've been able to refine my day trading strategy in this type of market. I would like to be taking more swing trades and things of that nature, but they're just not working out, so you got to kind of stick with what is working. But I actually bought REVB at $2.09, so I bought it on this breakout up here, and I sold it at $2.19, so I sold it right about there, actually just before it turned around. So I got really lucky on REVB, so it ended up being about a 4.5% gain. But normally I like to buy either the rounded bottoms or the breakout after right around 15 minutes or so, and this one did not go very far at all. And these type of day trades for the most part are just kind of fizzling out kind of quick, so I'm taking my profits rather quickly. And like I said, I got pretty lucky on this one because it only went up just a couple of cents past where I had my sell order. But all in all, a decent gain in REVB. And actually I made a day trade yesterday. Since I didn't make a video yesterday, let's actually go over that real quick. I bought OCGN. And OCGN, for whatever reason, gapped down today. So, man, the market is just very unforgiving right now. But let's go to the minute chart. Let me see if I can back it out to yesterday, and I'll show you how this one played out. Let me get rid of this big gap down day so we can see it a little bit better. But I ended up buying OCGN at $3.84. So I bought it. I'm going to have to back out just a little bit more here. Ended up buying it about $3.84 on this little rounded bottom breakout right here. This is what I like to trade the most. But I bought it at $3.84 and I sold it at $4.09. So I sold it, let me see here, just a little bit higher. Sold it right there, and then it rolled over. And the reason why I sold it at $4.09 was because it was getting close to the 50-period simple moving average on the daily chart. So I wanted to get out of the stock before it ended up hitting that. I think it had a little bit more, runway before it got to the 50-period simple moving average, but that was about a 6% gain. Actually, let's go back to the daily chart. Let's see where that 50-period was. Yeah, it was right around, I think I had it on my chart yesterday at $4.15, but that's about where it was. So I wanted to get out just a little bit before that in case it, kind of hit that moving average and rolled over fast. But as we can see, it actually blasted quite a bit past it. So, I mean, there was a little bit more to be had if I would have gambled and stuck with it just to see if it broke through that 50-period simple moving average. But, I mean, if you look at today's price action, if you would have stuck with it a little bit longer, you'd have been stuck with a big loss. But That was my trading activity for the day. I'm going to end the video right here. If you guys have any questions on any of these things or on any of the charts on this strategy, please leave it down there in the comments section for me, and I will get back to you as soon as I can. Thank you for everybody who sent me the the kind words about me getting better. I really appreciate that. But thank you for watching this video all the way to the end, and until next time, take care, everybody.